big question coming in on everyone's mind, and not just that, exactly what's exactly happening in the global picture when you talk about the tariffs, how are EMs poised for it, and when will the FIIs start coming back into India? We have Chidu Narayanan, who's the head of macro strategy at APAC at Wells Fargo, joining us this morning. A very good morning to you, Chidu. And the big question being, where does India lie in this entire global picture, given the fact that, yes, you have a lot of global factors also hampering the way how the Indian markets are performing. But what's your take coming in, and how do you see this entire global setup at this point in time?
Hi, good morning, and thanks for having me back again. Indeed, it's been a month of the Trump 2.0 presidency, and there has been a lot of policy headlines across the wires, particularly on tariffs, but not to forget the geopolitical headlines that have been coming on as well. We think all said and done, markets are actually reasonably resilient given all of the noise that we've had externally. We think that the dollar should be even stronger than where it is right now, given the significant risk-off sentiment that should be playing out. Tariff risks are here to stay. Tariff implications are not a question of if, it's a question of when. We think it'll be happening through the term of 4 years, through the next few quarters as well. And in that scenario, we think that risk assets should be underperforming, the dollar should be outperforming. It's not going to be a straight line appreciation of the dollar. There are going to be ebbs and flows. So there are opportunities to trade that. There will be periods of dollar weakness as we're seeing right now. But over the medium term, we think dollar Asia should be generally higher. Or in other words, Asia FX should generally be weaker against the dollar. Within all of this, the INR probably is a little bit more resilient than some of the more trade open economies. Something like the Korean won, the Thai baht are a lot more vulnerable, but INR will be facing some weakness as well.
All right. Good morning, Chidu. This is Shrishti also joining in. But give us a sense on the emerging markets inflow, because of late we have seen that the flows have been not that great, and especially Indian markets have been underperforming. So what's your sense that when will FIIs once again start looking at this particular market, and how is India placed?
See, that's a question of two halves. One is the broader overall EM sentiment that investors are thinking about, and that we think will remain vulnerable near term. In fact, we think we're a little surprised that it's not even more vulnerable. There is a bit of a resiliency in the markets with the expectation that all of these tariffs are a tool for negotiation, and there would be some sort of a truce at the end of it. But we think over the medium term, EMs should be a bit more vulnerable. Within that space, India benefited a lot last year from the rotation out of China assets into India. We think that there's been a little bit of a re-rotation back into China as the bottom seems to be in place. We're not very bullish on China macroeconomy as such, but in the face of external headwinds, and given that data has been possibly bottoming out in China and some more monetary policy support has come in, we think that the bottom might be there near term for China, which could see a bit more of rotation out of India into China.
Right. Also, I wanted to get your take when you talk about this entire US markets, and how should one actually view that, Chidu, given the fact that US has been pretty resilient at this point in time. And also you are seeing a lot of shift actually go towards China when you talk about, when you compare India versus China, at least in that sort of a game. What's your take on this one, and also the US markets in particular? Where do you see that one headed? Because the resilience, it could be a cause of worry for EMs.
That's a great question. And I think that has been a little underappreciated by markets. There are many reasons why the dollar should be stronger. One reason is the increased risk aversion that we discussed earlier in the segment. But also the other reason is, one, the US economy itself is in generally better position than most of global peers, certainly better than Euro area and in Asia. So that continues the story of US exceptionalism that we've been seeing for about 4 years now. And the other aspect of this is, yes, the Fed is cutting rates, but it's actually cutting rates way less than pretty much all of the other G10 peers. We think the Fed would probably deliver another 50 basis points of rate cuts this year, but that's going to be coming well into the year, possibly in September and in December, which is a long way away. On the other hand, we're seeing rate cuts from Euro area, from the UK, from Bank of Canada. We have a couple of central banks meeting this week in Asia as well, Australia and New Zealand, and they are cutting rates as well. We've seen the RBI deliver rate cuts. So in a rate differential perspective, the Fed, despite cutting rates, is still in a better position than the rest of the world. So all of these factors will continue to drive dollar strength. We will have some periods of dollar weakness when, again, markets look at negotiations as a tool or rather, markets look at tariffs as a tool for negotiation, and that could bring in some relief rallies for EMs against the US. That is an opportunity to be buying the dollar and to be less getting into less risky investments rather than piling on the risk sentiment there.
All right, Chidu, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us and also giving us a sense that how is India placed versus the global markets.